I don't really talk about individual shares on this channel, but Metro Bank, one of the companies that I've invested in, has recently tanked by over 70%. As you can see from my portfolio, it was down nearly 70% on Thursday for the past 6 months, and it has generally been performing incredibly poor over the past few years. Metro Bank opened during the 2008 financial crisis and was the first bank in the UK to open in over 100 years. That's right, new banks aren't really a thing in the UK, so it was super bold for Metro Bank to open a bank, especially at the time of the financial crisis, where many institutions were going straight into bankruptcy. Metro Bank positioned itself as a so-called challenger bank to the big high street banks that were around for hundreds of years. The bank promised to have longer opening times and be open 7 days a week, and now has nearly 2.7 million customers in the UK. Metro Bank had a focus on increased customer service and even provided water bowls for customers who brought along their dogs. However, recently Metro Bank's share price has completely tanked in response to news that Metro Bank is trying to raise millions of pounds to help with its finances. The bank's shares sank as much as a third after newspaper reports that it needs to raise £600 million. However, Metro Bank is seeking to reassure investors about its financial position, as it said it continues to consider how best to enhance its capital resources. The bank has also stressed that its finances remain strong and it continues to meet all regulatory requirements. In the UK, customer deposits up to £85,000 are guaranteed by the Financial Services Compensation Scheme. This scheme guarantees that if any bank gets into trouble, depositors will get their money back up to that level of £85,000 per bank account. The bank now has to consider a number of options to boost its balance sheets before about £350 million worth of debt has to be refinanced in October 2025. However, it could also raise hundreds of millions of pounds through its sale of debt, shares or assets. So asset shares are likely to contain part of its mortgage book, which are worth billions of pounds. The team at Metro Bank, which includes bankers at Morgan Stanley, have reportedly started to approach other rival high street banks, including Lloyds and NatWest, about buying its £3 billion worth of home loans. So back in late 2020, Metro Bank sold its portfolio of owner-occupied residential home loans worth about £3 billion to NatWest. So while Metro Bank is currently still operating within the financial regulator's limits, it's doing so within a tight buffer, meaning that it will need to raise more cash from investors in order to grow as a viable business. Metro Bank has said that it expects its next quarterly trading update to show continued momentum and continue to acquire customers along the line, being in line with expectations. Metro Bank also says that it is positioned well enough to see growth in the future. Currently, it said it holds around £16 billion in customer deposits, and it has roughly 2.7 million customers. This is spanning its 76 branches it has across the United Kingdom. News of its fundraising plans sent the bank's shares plummeting on Thursday 5th of October, and shares were even suspended at 2 points in time in the beginning of Thursday. Shares have lost about 63% of their value since September, leaving the bank worth only £65 million, down from its peak in 2018 when it was valued at £3.5 billion. The Bank of England's watchdog, the Prudential Regulation Authority, is continuing to monitor Metro Bank's operations. Robert Sharp, who is Metro Bank's chairman, met the watchdog on Thursday, but apparently this meeting was a long-standing meeting which was organised before the fundraising attempts. Metro Bank has been struggling to repair its reputation after an accounting scandal back in 2019 when it underreported how much capital it needed to hold against its risks. The bank and its two former executives were fined £10 million back in 2019 for misleading investors. The bank was able to become profitable again this year since 2019, but investors got spooked when they found out about a failed application. So by law, banks have to hold a certain amount of liquid assets so that they are in a position to pay out in short notice if a bank faces unexpected losses. So Metro Bank was hoping for these requirements to be reduced by asking permission from the Bank of England in order to use its own internal models to assess its own assets versus mortgage risks. However, this request from the Bank of England was denied in September, which triggered a steady sell-off of the bank's shares, leading to a massive fall in its valuation. So if that application had been approved by the Bank of England, this would have significantly improved Metro Bank's standing, as it wouldn't have needed to raise as much capital, and as a result, it would have been much easier for Metro Bank to expand. And as you know, the stock market is forward-looking. If investors feel like the company has a lot to grow and expand and become more profitable, they will invest now for the hopes that in the future, the value of their shares are going to be worth a whole lot more. Analysts are now skeptical that Metro Bank will be able to lure new investors who may be scared off not only by the Bank of England's decision, but by concerns of Metro Bank's potential to raise more cash. So the credit rating agency Fitch said that Metro Bank's earnings could come under pressure partly due to competition of customers' deposits and how costly it has become recently to raise money in these sort of markets. So Metro Bank's bonds are due to mature in 2025 and have been trading with a yield of around 33%, suggesting that the lender will have to pay more to lure investors. Metro Bank could well and truly be on its way to bankruptcy. Given that it's a new bank with relatively no history, it is very unlikely to be bailed out by the UK government. This will cause any stocks that you hold in Metro Bank to become worthless and could also cause a ripple effect in the UK financial economy. This is something I'm not looking forward to, but make sure to check out some of my other videos and I will see you in the next video.